Good evening to everybody who is here with us. Welcome to this webinar organized by Philip, and the topic would be how to trade Asian indices in the volatile market with technical analysis. And thank you, Philip, for the introduction. But after hearing the introduction, I want to just make a bit of clarification because during the introduction, you mentioned about the fundamental events that took place last week and so on and so forth, and how will it impact the market. Actually, my discussion topic today will not be along that line. I want to just highlight a couple of things to you. The title itself, let's take a look. There is something called trade, right? I'm talking about trading, not investing, and I'm zooming into indices. So it's like not about all asset classes, including like gold, cryptocurrencies, or whatever. And I'm using technical analysis. So therefore, I will not go too much into fundamentals or may not even be so. Anyway, this is what I do, right? So I've already touched on trading, index, technical analysis. One more thing, I trade futures. So I'm using this instrument called futures. Also, what are we sharing with you? So not like ETF, not like shares, or not CFD. Yeah. So I trade index futures with technical analysis for 30 years. Later, I will share with you my story, part of the teaching today, and you will know I really mean I've been doing this for 30 years, and not only trading but teaching. Okay, so tonight's session, I will not be able to turn you into a profitable trader, but I'm going to show you the way. What are the things that you need to be aware of if you wish to walk this path? All right, so that would be the main focus. Yeah, I hope we are along the same line. Now, this is where I come from, and that explains why I'm wearing this particular jacket, right? I'm still having it. So in the floor, there will be different kind of people. Some are employees, some are floor managers, some are whatever you call them. But there's another group of people called locals. This group of people, we are the one trading our own account, yeah? So we have no pay, we have no customers, no commission, but we trade our own account. If you make money, that's our income. If you lose money, we lose our own money. So that is what I do. All right. I will zoom into perhaps give you an example of this few Asian market, because Asian market can be very wide. So these are the 4 SGX products that I myself actively monitor as well as trade. Yeah, the Nikkei, Singapore, the Taiwan, and the China. I may not talk about all of them, but I will make reference to some of this. And of course, before I move on, this is a must for most of the traders, if not all, doing seminars like this, especially under SGX Academy, the disclaimer. So instead of reading out for you, I want to summarize to you what it means in a very candid manner. Trading, while trading gives you the opportunity to make the kind of profit that you can never even imagine, at the same time, it is also possible to take away all your money at a very, very quick time. All right, so would there be an easy way to summarize what this disclaimer means? Put it in simple words again, you can make a lot of money if you're good, but if you're no good, you can also lose a lot of money and very, very fast. All right, so do take note of that. Now, my seminar today about trading Asian indices with technical analysis, but I do have a theme, yeah, that will govern my flow. This pandemic has changed our lives, right? I'm sure you are aware of that. And specifically for me, which aspect am I actually looking at in terms of technology? Over the last 2 to 3 months, we have all experienced, like it or not, confronted with this big change that is unprecedented. The outcome, for better or worse, depends on what? It really depends on one's adaptability to this change. Yeah, to this change, how well are you adapting to technology, whether on the individual level or as a corporate company? All right, so basically, why am I focusing a theme like this? Because what is happening to you now, out of no choice, has happened to me a long time ago in terms of technology change. Okay, so I shall explain this by sharing my story with you that will deliver the message. So let me go back to what happened in 1990 when at the age of 28, yeah, so that very well review my age, right? In 1990, I was 28 years old as a software engineer. I felt that my employment income is a little bit too low. Now, I am paid above my peers, yeah, but because of I would like to enjoy a little bit more luxurious lifestyle, so it is not exactly enough. So I wish to make more money. So what are my options? Yeah, I'm not business-minded. I don't know what else to do, but I never stop pondering. Okay, so I do not know whether this is what's happening to you today, out of no choice because of this pandemic, that you wish to make more money. So go back to my story. Now, what happened? I attended a seminar invited by a broker, not to teach course, not course review, but a broker. This broker is something like Philip, yeah, but in a different nature. A broker's job actually is to encourage people to come in to open account to trade so that they will earn your commission. All right. Now, a broker would hope that you will make money, because if you make money, you will continue to trade and they will continue to make money out of your trading commission, and it's a win-win situation, right? So I attended a seminar by a broker that promotes currency trading. So they show us a chart like this, yeah. So 30 years ago, the pound chart will look very much similar to what it is today, right? I'm just showing you a pound chart. Now, first of all, this is a period spanning 24 hours from 12 o'clock to 12 o'clock. Within 24 hours, they're showing you the opportunities. This magnitude, right, one big figure has got a value of 1,000 USD, 1,000 USD. So basically, a movement like this, yeah, if you catch it, it will give you $1,000 profit on one lot. You can also make the other direction, the same magnitude, another $1,000 on one lot. All right. If you wish to make more, then you do more size. If you cannot catch the whole thing, you will do you make less. So basically, as when I was in 1990, I saw this. I saw opportunities. I saw the opportunities. Yeah, I don't know about you. All right. So what happened? This is called trading as opposed to investing. Trading, you can benefit from both directions. We call you can benefit from long, you can benefit from short, and you're able to benefit from leverage. Leverage means that you need only a small capital to have a big exposure, right? Do take note that leverage is a double-edged sword. Yeah, you can make money a lot more, but also if you're no good, you can lose money very, very fast. Now, it allows you to maximize profit and minimize holding period when you trade. A typical trader will not want to hold a position overnight. So therefore, you reduce your risk exposure. Any shocking news happen overnight will not affect you, because usually you will get out of position by the end of the day. Yeah, and also of course, all this would lead to an increasing of the ROI. Okay, so what has this got to do with this? Yeah, tonight we're talking about trading Asian indices. Now, Asian indices behave the same way. You can achieve the same thing. I show you the currency chart just now. If you still remember, I'm showing you now. This is something which I prepare for this seminar. I prepared my slides over the weekend. So the weekend, I just pick up this slide, which is the Nikkei 225 movement on Friday. So can you see that it spans over almost 24 hours from 7 a.m. from 7:30 a.m. to about 5 a.m. So the opening hours is actually quite long, almost 24. Well, to be precise, about 22 hours. Yeah. So the opportunity would be such that market would be fluctuating within the day, and this movement up on Friday would give you a monetary reward of more than 1,500 Sing dollar. And you can also make money if you catch this movement down, another $1,500. All right. So all this opportunity can be found in Asian indices, and not to talk about today. If you know what happened today morning, there is some so-called fundamentals that give the market a knee-jerk reaction. This is the SIMEX, which is our local STI equivalent index. It plunged all the way down to a support level, get supported and rebounded all the way. So similarly, you will always have opportunity both directions, almost every day. Not every day, but almost every day. All right, so back to my story in 1991. After attending that session, I really like it. So I started trading, yeah? I started trading. Now, I did not achieve consistency, although I can make money, but every now and then I would give back. Sometimes one bad trade, I will give back about 2 weeks of profits, yeah? So after going on for about 3-4 months, I start to realize there must be something about it that I'm not aware of. So can I find the winners? The winners, that means traders who are winning money. How can they point out to me what must I do correct? Now, don't get me wrong, I'm not looking for a guru to tell me where market is going. I just want some pointer. And incidentally, that is when I realized that we have this thing called open outcry in the floor. It's called SIMEX, yeah, whereby they trade futures. So this is why I decided to quit my job and I joined the floor as a floor trader to learn from the professional community. Okay, so this is a screenshot of me trading the Nikkei 225. This is taken in 1994, right? Why is it in 1994? Because you can see that fella standing next to me. He's the fella, if you can recognize, by the name of Nick Leeson, for those of you who are familiar, right? Nick Leeson, if you don't know who he is, single-handedly brought down Barings in 1995, okay? So basically, I'm trying to show you that I have been a trader since that long ago. Yeah, and again, go back to the topic. I've not deviated. Trade Asian indices with technical analysis, and that is exactly what I do. I am in the Nikkei 225 pit, trading the Nikkei index. Yeah, together with Nick Listen and the rest of the people. And what happened? This crisis brought it all the way down. All right, it created a crisis, and what happened after a crisis? It reached a bottom, stabilized, and it would recover. A few years later, 1997-98, we have Asia financial crisis, right? A big crash, stabilized a little bit. What happened? A V-shaped recovery. A few years later, year 2000, 2001, 2002, I experienced all kind of crises, starting from the dot-com bubble, and then the 911, yeah, the terrorist attack, the Twin Towers dropped to the ground, and then 2002, SARS. No, 2003, yeah, 03, SARS. So all these crises will have a similar characteristic. It happened, everybody panicked, crashed, and then stabilized. What happened? Recover. All right. So of course, not to talk about the subprime crisis and then today. Now, so what happened is crises will always behave in a similar manner. So therefore, I see a lot of webinar title lately to talk about, to tell people how to benefit from this crisis. Now, ladies and gentlemen, I am not talking about benefiting from a crisis. I'm talking about benefiting from crisis, not crisis, day in, day out, normal day trading. How do you grind money out of the market as a trader? Trading indices with technical analysis. So this is what this environment has helped me. So I talk to these people when I join the floor, be very humble. So some seniors, they will be very friendly and they would be helping you, right? They will be giving newbies what I call trading tip. Yeah, this trading tip is not stock tip. I'll tell you what to buy, what to sell, and then follow me. Yeah, the tip means that what you must do. Now, everything else I summarize into what I call the 2 golden rules, right? It's very valuable. This is what I share with everybody during all my big scale seminar, webinar, as well as during my course. And tonight, of course, I will also share with you. All right, the importance of a trading community. When you meet genuine good traders, they will help you in a way whereby they won't tell you, oh, I'm God, I'm very soon, but they will be sharing with you what you need to do to progress as a trader. Following these 2 golden rules. Number 1 is you must find a way that is objective, that is distant enough, and that belongs to you, that you identify and follow the trend. Golden rule number 1, to identify a trend and to follow the trend. That is to give you the advantage. Yeah. Now, not to forget, trading is all a probability game. So even you have a good system that gives you a mathematical advantage, there will be times when you are wrong because every trade has got a random outcome. So that is when you will need to follow this golden rule number 2. For every trade that you put on, if you are wrong, you have to cut loss. All right. This cut loss is especially important if you are using margin and leverage product. Stock traders don't know how to cut loss. So if you are a stockier, please learn that if you want to do margin trading, you must incorporate this. If not, you're going to suffer very miserably. All right. So let me repeat one more time. Very important, the 2 golden rules. Number 1, identify and follow trend. Number 2, if wrong, you have to cut. Okay, to give you an analogy, to put another way, what I've just told you, this is a movie. Incidentally, this circuit breaker, a lot of people get stuck at home, yeah, especially during the first month. So many people start to watch Netflix. Now, my daughter searched this program and said, Daddy, watch with me, yeah. This is an old show. I've heard about it, but I've not watched before. So I watched with her. Hey, I realized that perhaps if you want to understand what I'm trying to say over the last 15 minutes, perhaps you can watch this movie. The background, very quickly, I'll give you a 1-minute summary. It's about a university professor trying to pick up these 5 students who are very good at numbers and memories, right? He trained them how to count cards, and bring them over the weekend to Las Vegas to beat the casino, yeah, to make money that way. But of course, it did not end up well because if you make money from the casino, eventually you're going to spit it all out, all right? But nevertheless, this is what I'm trying to tell you. Professional traders, we are very much equivalent to professional gamblers. Although this term will not go down well to most people, yeah, the term gambling. But ultimately, you're supposed to find an advantage, all right? Find advantage, how to count cards, and play the hand only when you have the advantage by following the golden rules, yeah? So you identify the trend, follow the trend, and wrong, you cut loss. So pretty much like how you play 21. So in a similar manner, and that would lead to what is that trading plan? How do you count cards? So basically, I've been counting cards in the floor, making decent income since I joined the floor from 92 all the way until 2005, 2006. Then the change happened. Now, what kind of change? Because open outcry closed. No more open outcry. And goodbye to the bus of open outcry. And it's going to give way to electronic trading. So pictorially, how does it look? All right, take a look. The top man is example, if you during the open outcry days, if you wish to trade futures, all right, you open an account, you can call your broker to place an order. Whereas me, I'm inside the pit shouting and trading myself. Yeah. So there's the difference between a customer on top and a trader in the pit. Now, today the floor has already closed. So in the past, when you want to place an order, you got to call your broker. The broker will have to run down to the floor, execute your order, and report to you that your order has been done. But today, this is gone and being replaced by electronic trading. So if you're still a customer calling your broker will look at the screen and fill the order for you and tell you it is done. All right. Today with electronic trading, can you directly look at the screen yourself? Yes, you can. Okay. So today, can you see that this change that took place in 2005, 2006 that caused people like myself out of job physically, we have to go into electronic. At the same time, this change also make trading accessible to every individual, every man on the street who wishes to trade. All right, so this is what I mean by the pandemic has changed our lives. So many of you has been working. Suddenly today you cannot go to work because of this change. You need to work from home. Yeah, some of the jobs still require to go back to work, but some other jobs are starting to find that it's more efficient to use technology. Now, again, for better or worse, it depends on how adaptable you are. If you are adaptable, you find that actually you become a lot better. Just like this pandemic, you can see that many companies went bankrupt because they cannot adapt, but some are striving very, very well when they can adapt, right? So it is the same then, it's the same now. The only difference is what's happening to you now out of no choice has been happening to me since 92 and then 2005, 2006, and then all the way since then, I have been trading with technology. Yeah. So how to trade Asian indices in the volatile market with technical analysis, right? I did not deviate, I'm still along this line. So therefore, how to start this journey or how to fine-tune this journey if you have already started. Now, this is the advice that I will give you. Number one, if you are not there yet, have not started yet, and you wish to do so, get a broker support, of course. This organized by Philip Futures, yeah. I wouldn't say that because they're the organizer, I would say that they are good. Incidentally, I am also a Philip customer. When the floor closed, I am already a Philip customer. So for the last, how many years? Since the floor closed from 2005 until now, I've been a Philip customer, yeah. So you want to approach the broker to make you understand a bit more about futures if you don't, especially the contract specs, what contract you wish to trade. You need to know a bit about expiry, about margin, call margin requirement. Yeah, so all these things, if I were to talk about it, I'm going to spend 1 hour, all right? So I would rather let the broker help you with that. At the same time, you want to open an account, you also need to learn how to execute the platform. So how to execute a trade, how to learn the user interface, get your broker to help you. Now, I'm going to share with you how to make decisions using technical analysis. Yeah, I'm going to share certain things with you. So how do you do it if you do not have chart? I use a paid software, okay, because I need to fine tune some of my indicators. But for you, if you want to try as a newbie, you don't have to pay anything. Philip also have free charting for you. So all these things are the things that you can approach Philip for further support after this webinar if you are keen. Now, what else do I want to share with you for the remaining time of my webinar tonight? Professional trading needs to develop a trading plan, correct? You must know how to count your cards, yeah? So learning some kind of setup. Now, I'll be sharing with you what a trading plan entails. This abbreviation called DEEP, very easy to remember. You remember DEEP, D-E-E-P. You must have these 4 components. Number 1, you need to have a way to establish direction, to tell you whether how to identify trend and how to follow trend, whether you should be buying or selling. I will elaborate on this, yeah, later on. You will also need to, the line separating D and the other is, the bottom part will be called a setup. You would need to decide exactly how are you going to engage the market, right? How do you enter the market? As well as disengage, meaning after entering already, how are you going to exit? There are 2 kinds of exit. You will reach a profit target, which you wish to get out with your profit, or you are wrong, yeah, then you want to cut loss and make sure that you lose a little bit and you survive to fight another day. So basically, position sizing will be too advanced to elaborate. Yeah, as a newbie, you probably do 1 or 2 lots until you're very familiar. Now, so the whole trading plan will involve establishing direction as well as doing a setup. All right, I do not have so much time. I wouldn't have time to elaborate every individual part. I would rather spend a little bit more time to hammer home one thing for you, which is the direction. Yeah. So I hope after this webinar, if you find what I share with you useful, you can go and explore, spend more effort to master that, and then you can become an expert yourself in establishing market direction. You don't have to depend on anyone. You don't have to go and listen to guru lah. They tell you, no, you want to know, come to my seminar. Yeah, I tell you what. You don't have to. You can tell yourself. Now, how do you establish direction? Do take note of these few pointers. Number one, I'm using pure technical analysis, not fundamental. So don't expect me to talk about what event happened last week lah, what's going to happen next week lah, what meeting is going to happen, how will it impact the market. I don't care, and I don't need to care. You'll find out very soon why I don't need to care. I'm using TA. Technical analysis are broken into maybe 2 main approach, right? The second line, you can see that is predictive analysis and reactive analysis. Yeah, predictive analysis is a little bit more advanced. Predictive means that people will anticipate a turning, anticipate, right? I will not cover that. I will talk about reactive analysis, meaning that you let the market tell you what is happening now. Yeah, what is happening now? Is it bullish or is it bearish? So this would serve your purpose pretty well. All right, before I go into the details, I want to explain to you this concept. Once you understand this concept very well, you would be totally, you would totally buy this whole idea that you would trust it. Yeah. Now, this next thing is what I do during my course. I elaborate a lot more and give them a lot of examples to make sure they understand. But for today, I will explain to you the concept. I may not have too many illustrations, but should be good enough for you to take home. Yeah. I'm using moving average. MA stands for moving average. Moving average is a way for me to define a fair value. All right. Now, listen to the concept of how I establish direction, yeah, to define trend. First of all, there must be some way to tell you what is the fair value. Look at this slide. For example, if a fair value on the chart has established to be around $20, yeah. For example, you're looking at a DBS chart, and the moving average tell you that the fair value is at $20. Now, what does it mean? When it's $20 and the price trades above the fair value, the price is trading $21, $22, $21, $22, $23, right? Staying above. Fair value is there. Above means it is expensive. Yeah. By definition, expensive, people will not want to buy. But fair value is $20. It is not expensive. Why is it expensive? Because people are willing to pay above fair value. This is the concept and this is the logic to tell you that market is doing premium, price above fair value. It is bullish. The trend is up. You want to focus on playing long. A very simple logic. Now, whether you understand or not, I won't repeat this, but I would explain the other way, yeah? So that if you don't understand, you would listen to the mirror image. The fair value is $20, and the price is doing cheaper than fair value. Now, we hear the word cheap. Men on the street, cheap, they want to buy. Fair value $20, the price is doing $19, $18, all right? Why is it doing $18? Because there are big boys that is willing to sell, or I use the term dump. They're willing to dump below fair value. $18, you want to buy? Okay, can I sell to you. Then that's $70, hey, you want some more or not? I sell to you. $16, you want some more or not? I still sell to you, all right? So when people are willing to sell below fair value, price is below, they're willing to sell discount, the sentiment is bearish. So very simple, yeah. I'm doing it very quickly because we don't have too much time, but explain this very important concept to you. So if you get it, you will understand after having established a fair value, if the price is on top, you want to focus on buying, the price is below, you want to focus on selling. And that is how you tell a trend. Okay, so now, what else I'll be teaching you how. How do you determine this fair value? Now, there are 2 ways. There are 2 ways I'll be sharing with you. Number 1 is how the funds, the big boys, the fund managers, how do they determine fair value? Because they are long-term players. They are not short-term. They don't have the luxury to trade short-term like individual like myself, right? So the big boys will do a longer period fair value. I will share with you what an individual trader will use to establish another kind of fair value, right? Starting with the big boys first. Now, going back to look at these 4 indices, yeah, China, Taiwan, SG, and Nikkei. All right, allow me to switch to another one. I'm showing you the chart. Okay, I hope you can see it now. We tested with organizer just now. They can see this. Now, you can see that. Now, before I talk about this chart, let me explain to you something. A lot of people will ask a question. The market is bullish or bearish, right? So it is very difficult and not correct, for that matter, to generally ask whether market is up or down, because it really depends on which market you're referring to. All right. For me, generally, I will look at all the indices. No, not all. I will select these 10. You can see that on the left side, I have the 3 major US indices. I have the Dow Jones, the Nasdaq, and the S&P. So these 3 represent the US market. And then I have the DAX, which is the Europe market. The center for with the Asian markets we're talking about, China, Taiwan, Singapore market, as well as Nikkei. Yeah, and the right 2 would be our neighbor KL and Thailand. Now, so at one glance, right, basically, are you able to see that majority of the markets are above that pink line? That pink line is the 200 EMA. 200 EMA, yeah? And can you say that Southeast Asia, including Singapore, we are below the pink line, right? So, which means that the Southeast Asian market are generally doing discount. So the money is not flowing into this area, but the money is flowing into all the other areas. Yeah, I will just blow up 2 charts to give you an illustration, and I'll talk a little bit about this one just in case you are keen. Now look at Taiwan, Taiwan index. All right, let me squeeze a little bit all the way until the subprime crisis that took place in 2007-08. Can you see that over here, the crash, right? Before the market give you the big momentum crash, at that point in time, it surely must have gone below the 200. So therefore, every time when the market start to go below and doing discount, you must start to get ready. Not always that it will crash, yeah, but a crash will always give you ample warning before it reach the rock bottom. Now, so Taiwan, after that, can you see it will do a recovery, right? After a crash, once the base is formed, it will always do a recovery. And by today, Taiwan has already gone through the high of the 2008, yeah. But meanwhile, you take a look. This is a 10 years period. During this period whereby you have a general uptrend when it is doing premium. Whenever market is doing premium, it has the ability to slowly trade higher, right? So this is how the Taiwan chart looks like. All right, I'm going to show you another one to give you a very good illustration of how this thing define a downtrend. Now, in this case, I will use the Malaysia market to illustrate, because what happened was in 2018, when the election took place in Malaysia, when they tried to kick Najib out of the picture, right? So this is when over here, can you see on the left side, that when that whole political turmoil took place, this thing plunged below the 200 EMA, which means that the funds are all willing to sell discount. Okay, after some initial panic, yeah, can you see that this thing would want to recover to test the 200? It is always doing that. This round also the same. Now, after going back to test the 200, it depends on whether it's above or below. As long as it is staying above, I wouldn't call it bearish. Yeah. Now, I know today some people are saying that, oh, above, right? I don't think it is real. It will drop later. I don't care. Drop later, then come and say. But at this moment, it is above. So over the last 1 month, you're supposed to focus on buying the market. If you sell, you're going to lose money. Yeah. Now, so after KL dipped below again the 200 EMA, how KL started with more momentum down and taking low. Can you see that every time KL pull back to the 200, it's offering you very, very good resistance to sell. So it's on the very orderly downtrend all the way until the COVID-19. And this is the first time that we attempted to push above, and right now sitting on it to fight. Okay, so I think I've given you a decent enough illustration to let you see that when you look at the 200 EMA, it will give you a very objective view. Right now, most of the markets are above. So if some knee-jerk reaction causes it to come down, as long as majority does not go below, there's no panic of another deeper crash. Okay, so that would be the funds. Yeah. All right. Now let me share the next thing. How about me? While I look at the funds 200, I also want to look at a faster one, because I'm doing very, very short term. The 200 is too far off, right? So a short-term parameter, if you are keen, take note. I'm using a pair, a 35 with a 55. So it will give me a certain range, not just a single level, yeah? A pair 35 and 55, and it will look like this. All right, I'm going to go to the chart again to show you the live chart, the live chart. This is used on a 1 hour. Take note, 35, 55, using on a 1 hour chart. Look at the 10 markets as well. Are you able to see the right side? Southeast Asia, Thailand, Kuala Lumpur, and Singapore. Can you see that we are below the fair value? Even for a smaller time frame, yeah, for individual trader, these are the weak markets. Can you see that the rest of the market are basically doing premium? Nikkei is on top, China on top, Nasdaq on top, DAX on top, Taiwan on top. They are all doing premium. So don't try to predict that the market will be down. When people go down and start to sell discount, then you try to short. It's not right now. Okay, the strategy is to buy as close to the fair value as you can. Okay, so I will blow up again a little bit to show you the difference between maybe Taiwan and Singapore. Can you see that during June, yeah, it has from a dip below discount into premium, then the market start to have a great rally for June. Now, about 2 weeks ago, suddenly there's a panic of a second wave, right? Second wave of pandemic, and that caused all the market to dip below into discount. While you want to be bearish, if the market cannot stay below and start to move up again and stay premium, can you see that over the last 1 week, you would be making money if you buy the Taiwan, yeah? If you sell, you're going to lose money because Taiwan today is taking high again compared to the last 1 week. Now, compare this to Singapore. Singapore, can you see that we also have a good up move in June when we start to go into premium? The same thing happened when they go into discount, but when we come back to the fair value, we cannot go above. We are effectively blocked by the fair value. No one is willing to pay premium. As long as no one is willing to pay premium, you will not stand a very good chance buying the SIMEX, right? Unless you want to catch intraday and you're willing to take profit. Okay, so let me go back to my presentation slides. So this is what I've shared with you. Compared to the rest of the things that I talked about, I have elaborated a little bit more on this part on direction. So I hope it will help you go back and do a bit of study and homework. Look at the 200 as well as the 1 hour 35-55. This will give you a very good way. You practice enough, it will tell you the direction. Okay. Now I won't have time to talk about setup. This is something that I would need to elaborate a lot more during the course that I do. So anyway, this is to show you intraday opportunity. This is what happened to the Nikkei, right? To the Nikkei on Friday, whereby you have a good up and a good down. So Nikkei, we've established that the direction is up, yeah? It will not keep going up. There will be intraday movement down like that to reach certain good support level for you to play. So if this contract is bullish, I want to wait for the market to dip, yeah, at certain support level. I want to look for buy opportunity, right? So of course, some people are good enough to play both sides, and some people like to pick top. So I'll focus on buying the Nikkei at this point in time, and I'll be focusing on selling the Singapore at this point in time. Now, see how Singapore plunged so easily today when there's some bad news, yeah? So of course, you can make both ways, but I'm pretty happy to make this one way down, and when it reach my profit target level, I would get up, yeah? So how you make money on long and short, depending on the direction bias. Okay, so I have about not too much time left before we do a Q&A. Now, again, my purpose is to share with you the pointers that you need to focus if you wish to develop yourself as a trader to benefit from trading, right? Indices using technical analysis. Now, there's one more thing that I would spend some time talking about. This is actually the most important. The next most important, but it's actually the most important, to keep a trading journal, What is the meaning of what is journal? The purpose of a journal is actually self-discovery. A journal is basically to enter all your trades, yeah, including having a trade plan and how do you play out that trade. So you will enter. I'll show you an example later on. The purpose of a journal is to help you understand the market, is to help you understand your setup, the strategy that you are doing, right? If you keep doing it. But one more important thing is to help you discover yourself, because no tie enemy, no tie self. 知己知彼，百战百胜. Many people would simply leave it to the gurus to tell them what to do, and if the guru is wrong, oh, they are no good long, huh? But you need to develop yourself to become a good trader, and this is what you need to do. All right, this is going to be interesting. I'm going to show you a couple of journals by our students. Yeah, this is one of our best performing students. Now, I'm going to show you these three monthly journal from January, February to March. He is capable of trading 3 contracts at the same time. So you look at these 3 portions, each of them represent one particular contract. He's monitoring 3 contracts. In each of the contract, the vertical column represents a strategy, which means that he has he's our advanced student. He has learned from us that he's able to manage multiple contracts with multiple strategies. All right. Now look at his total income for January. For this first contract, he made about 9,000. Second contract, he made 20 over 1,000, and this third contract, he made 60 over 1,000. Added together, in the month of January, he made 99,000 USD. Yeah, I will just quickly show you the second and third month performance first. In February, he made 135,000. In the month of March, he made 600 over 1,000. A student of ours. All right. In the month of March, why is he able to make so much money? Because he has already been able to master the skills of trading. So under normal volatility and circumstances, he made about 100,000 plus minus. But the opportunity in March actually speed up the whole volatility and give you a lot more trade opportunity, and therefore his P&L can jump to more than 500,000. All right. Now, my point is not so much to brag on the P&L. Let me go back to the first slide. Yeah. I want to highlight a couple of important points to anchor home the importance of a journal. Can you see this journal over this 1 month? It's not all black. Can you see a lot of red? I slow down to let you see. Can you see a lot of red, meaning that the red color entries are losses? Take note, ladies and gentlemen, a trader, just like you go to casino and you count and you play blackjack, right? There will be winners, there will be losers. But the most important point is winners will make more than your losers, so your net result will be profitable. Yeah, many beginners, they don't understand. They feel that cannot have losing trade. We have losing trade. All right, so that is a reality of trading. So this is the first point I want to take note. Second point, take note of all the columns. You need to demarcate the strategy that you have developed for yourself, and if you keep entering and trading this strategy by putting in the P&L, in the long run, you're going to study the market a lot more. You're going to study this strategy a lot more. You're also going to be able to find out whether are you good at this strategy or not, because you're going to realize that some strategies, people make money, but you're not good at. So you start to know which weapon would be good for you. Yeah. So these are the few important points I'm trying to help you understand the importance of a journal. Okay, I've already simplified the journal to this level already. I'm going to show you another, just 1 or 2 more simple ones. Take a look at this. This is the POT, stands for proof of trade, right? Proof of trade. This is the result of our students posting on our Facebook, yeah, every end of the week. End of the week, they will be posting their weekly performance, all right? And then together with proof of trade from the screen capturing of the chart. So take a look. Now, just in case, if somebody is asking, which I know in some of the public social media, some people claim to make some money and some people challenge them, real or not. Don't have to challenge me. If you don't believe what I say, you can just log off now, all right? Now, if not, let me show you. Before the students enter into their monthly journal and weekly journal, these are the things that they will post on our Facebook. It's called proof of trade. The setup that has happened, all right, to let the teacher as well as the classmates see, did I follow the same rule? Did I do correct or not? And with their proof of entry exit from their live account. So after each individual trade of such, they would tally into the weekly performance. For example, this student look at 2 contracts, all right, 2 contracts and a few strategies. And for this week, he only followed 1 strategy. He only did patterns and patterns. Yeah, there are some losing trade, but total he managed to make over 1 week $24,000. 1 week, 24,000, not too bad, right? But of course, another student also doing the same thing, didn't trade a lot, didn't trade other strategy, focus only on patterns as well. Can you see they are losing trade, but she managed to make about $8,000. All right. So this is the result of what you can possibly achieve after you have developed yourself as a trader over time. Okay, so this is about what I'm thinking of sharing with you. Yeah, when Philip approached me to tell me that, hey Tom, can you do a webinar for us? So I'm telling them that also Philip told me nowadays are very challenging because of this pandemic. Suddenly there are so many gurus appeared in the social media, and everybody claim to be able to explain everything to you and show you everything else. So he's telling me, Tom, so you must do something better than them, you know. Well, first of all, I don't make market call. I'm not going to tell you, oh, I buy low, sell high, buy low, sell high. Yeah, I'm going to talk about fundamentals. Now, let me recap what I've shared with you, just in case you are lost in my story. Yeah? And in case those people who log in late, these are the important points that I've shared since the starting of this webinar. I will go a bit slower. The pandemic has changed the world, all right? It has changed our life. It has changed in what way? It has hastened technology application, yeah? Now, if you are very hesitant about technology, you have no choice. If not, you'll be phased out. So some people are doing very badly because of this, but some people are striving and doing a lot better because of the adaptability to technology. That is the first point. All right, I'm sharing with you this because this is what happened to me since 1991 when I wish to make more money through technology. I have to join the pit, quit my job. Yeah, later when the floor disappeared and become electronic trading, I need to adapt to trading with technology. Now, today, you can trade with technology. You can access the trading already since 2006. So it's a matter of assessing it like anything else. Yeah. So I share with you what I do. I trade the Asian index futures using technical analysis. Trading short term, don't hold overnight as far as possible. And index, yeah, asset class. And we do futures with all the advantage of leverage, both long, both short. But you need to find out a bit more details about margin call, about expiry, and using technical analysis, right? So we don't have to care about fundamentals. Are you able to see that? Let's recall, I've shown you the trend just now using 200 EMA, all right? Are you surprised? People are saying that, oh, the things are very bad. Companies are going bankrupt, and then the second wave is coming. But as long as whatever the fundamentals are, if the big boys and individual collectively, they do not sell aggressive enough into discount, then nobody is going to continue to sell to let it go lower. Yeah. So as long as it is above and expensive, people are willing to buy, you must join in that direction and do not try to sell just because you think the second pandemic is the second wave is coming. So you need to develop yourself as a trader, which is the fourth point. And how do you do it? Get a broker's help, right? Involve Philip to attend whatever other educational seminar, just like this one or others, to know more about futures, to know how to open an account, how to execute trade, to get the free charting software for them. All right. On my part, I'll be teaching you about how professional traders need to follow certain golden rules. Yeah, I've already elaborated on that. The importance of a professional community to learn the right thing from good professional trader, remembering the golden rules, identify trend, and if wrong, cut loss. And then you need to start to do your planning. You plan deep. All right. Deep is to establish direction, which is following the first rule, follow trend, and then you have a setup, yeah, of how you enter, how you exit, and your position sizing. Not to forget, your exit will include how wrong you must cut loss, following golden rule number 2. Okay, and you will start to grow, yeah, as a trader only when you seriously keep a trading journal. Now, in fact, after this webinar, it depends on how keen you are. If you are keener, you can start a trading journal already, even though you do not know anything, right? You start to learn about setups. You start to use my method perhaps to identify trend. Okay, it's up, right? Maybe you find your way, come close to the fair value you try to buy. You put a cut loss level and you try to make money and you enter into your journal. You will start to understand the strategy. You will start to understand the market and you will start to understand yourself. So that is how you would really start to grow as a trader. Okay. All right, it's challenging, yeah, because my webinars are always different, the content and my delivery. So I wanted to spend not more than 50 minutes so that I'll give you more time for Q&A. So my conclusion, basically, allow me to just give a few more slides. Don't trade on the basis of tip. Don't try to listen to any guru, very soon, try to tell you whatever. Trade with the trend and don't trade with your friend, all right? The trend is your friend. Now, this thing in Chinese, yeah, 努力不一定成功，成功不一定要努，成功就一定要努力。What I've shared with you so far definitely imply that you need to put in certain effort. Some people are willing to put in effort. In fact, it's common sense lah. Any success has to come in with effort lah. But some people will simply stop at the first line. I need effort lah. So much work. I don't want law, huh? Let some guru tell me right up or down, I buy already wrong, he thought a lot better, right? So putting effort does not mean that you will make it, but if you want to make it, effort you surely have to put in. Okay, so this is common sense, but it's not so common after all. All right, finally, if you like my presentation and you like to understand more from our point of view, you can visit my website. Take note of this quickly, tysfutures.com. Okay, where my sniper trader, she actually write a lot of blogs, yeah, which give you a very good perspective of how you can continue to improve as a trader. And some people will be asking me about training. Now, I am a residential trainer in SGX, residential trainer. I conduct courses after which serious people will continue to choose to come into my training community. Yeah, because of the pandemic, I faced another challenge. My online my physical teaching, classroom teaching, and classroom live trading has to come to a stop. So right now, I actually spent the last 2 to 3 months trying to phase our live trading community into online community support. Yeah, we're phasing in quite well, and because of that, I am holding back my my development of my online course. So it's not ready yet. Just in case you are keen to find out what we do, yeah, in terms of training courses as well as the online support after that, you can take note of take down this email and write to us so that when we have anything firm up, we can contact you. Okay, so basically these are the few things, and this is a slide that is required by Philip. With that, I'm done with my presentation. I hope I've given you enough pointers for you to move forward, how you can possibly trade the Asian index futures using technical analysis, not only for difficult time, but for any time. Yeah, anytime. All right, with that, Philip, I'm done. Back to you to take over the Q&A session.
All right, thank you so much, Tom Yuen. It was thoroughly informative. All right, this is that time once again. This is when you send your questions and we fire them away to our professional speaker. All right, so just look for the question box on the right side of the screen where you have your control panel, and then just type them into the question box and we'll pick them up for Tom. All right, our first question is, are you able to explain what kind of indicators you typically use?
Oh, well, I learned a lot, and as of today, it's not so. I think what I use is not so important to you, but I would like to answer you what we teach. Yeah, maybe it will concern you a little bit more. Currently, ever since I started doing courses with SGX, I've the luxury, and my students also, to meet a very, very good trader. I call her a sniper trader. She's a lady. So basically, to teach our students, right, we are combining some simple indicators into a setup strategy that involve moving average concept, price action with candlesticks. Yeah, we use levels, use pivots to establish levels, plus Fibonacci. Is that okay?
All right. Thank you, Tom. This next question is from Derek. His question is, how do you determine price movement if there's a SMA that's lagging?
This is a very common thing that people with a bit of understanding but yet not total understanding on moving average. Moving average is not lagging at all. Moving average, right, is to average out all the price to give you where the fair value is. Fair value. So basically, I've already explained to you. I can either use a 200 EMA, yeah, for the macro definition of fair value, and I can use another definition for faster action. But of course, I use a lot more other parameters for different purposes. So I do not think that it is right to feel that moving average are lagging. It really depends on how you apply it.
All right. All right. Next question is from Nelson. His question is, why do you discourage overnight positions?
Oh, I don't discourage. I don't discourage. But the thing is this: you want to make maximum money with minimum holding period. Yeah. So when not everybody, not many people has the temperament to hold overnight position. A lot of people hold overnight, they cannot sleep. So assuming that if you're good enough to find an intraday strategy, whereby nowadays there are so many contracts that allows you multiple strategies throughout the day. If you can already make your money within the day, why do you want to expose yourself to uncertainty holding overnight? So that is the logic. Yeah, I don't discourage. If your strategy includes holding a longer position that needs to hold overnight, then you hold overnight. But if you can, for example, my sniper trader, yeah, when she came to my class to be my co-trainer, typically I'm the one that hold a bit longer. For example, if I hold a position over 1 week, and make $5,000, for example, all right, if she can put on the trade and make $4,000 a day, yeah, over 5 days you can make 20K. Why do you want to hold a position over one period whereby it keeps fluctuating and take 1 week to reach there? But this fluctuation allow me to keep taking. So that is how I would explain to you. That is how I would answer this question. Yeah, I don't discourage.
All right, Tom, next question is from Zed. He's asking, why do you prefer Asian indices and not US indices?
Interesting question. First of all, it's purely incidental. I have no preference. In fact, I joined the floor. When I joined the floor in 1992, right, I want to trade index. I have no other choices. There's only one index to be traded. That's the Nikkei 225. In fact, during that time, a lot of people dare not touch the Nikkei 225 because they say that it's a monster. It moves very, very quickly. But it suits my temperament. I don't want slow moving things. I want it to move fast. So good or no good, give me the outcome as soon as possible. Now, so I traded the Nikkei 225 for 14 years until the Nikkei closed. After the Nikkei closed, SGX asked me to help them do training. All right. At that point in time, the exchange rolled out a whole suite of Asian indices, which include Taiwan, include Singapore, include Nifty China. All these are pretty active and tradable. So in order to teach people and to support our own exchange product, I teach Asian indices and I myself trade indices. Yeah. But incidentally, I mentioned about my sniper trader. She is somebody who is so versatile. She can trade a lot of things, and she prefer markets that are even faster than Asian indices. All right, not convenient for me to mention the name, but perhaps you know what I mean. So no, I don't limit to this. But if I can make money consistently doing this, I do not see the need to explore other things, but it's a personal choice.
All right. Next question is from Jay. What would you recommend as a starting out TA strategy for intraday trading?
A starting strategy for intraday trading. Is that
Yes.
the question?
Yes.
Okay.
That's right.
All right. What I've shared with you a little bit more in detail just now, yeah, I would, whether you already know, I suggest you explore further, look at a few markets on the daily chart using 200 EMA to know the macro sentiment, whether the funds are actually still buying discount or dumping. All right, so use that as a main direction, and then you can use my parameter on a 1 hour chart, 35, 55, to determine the fair value to give you the bias to long or the short for your selected contract that you do. Now, then intraday, floor traders use one thing called pivot. This one I mentioned just now, but I have no time to cover a little bit more in detail. So you might want to do your own research a little bit, because pivot will do a very objective way to calculate to you where the resistance zones are and where the support zones are. So in a non-trending day, yeah, they will be influenced by a lot of news that cause a lot of knee-jerk reaction. For example, today, early in the morning, suddenly every market plunged, correct? Wow, when people look at the news, what happened? Because the joker from White House say that, our trade deal with China is over, yeah? And then the market will simply reacted to that. After that, seems like the joke is, he said, no, I got it wrong. Well, as far as I'm concerned, even if he doesn't get it wrong, even if he meant it, the trade deal is over. The market will react down, all right? Even if he did not say that I don't mean it, I'm going to tell you that the market will still turn back up. Why? Because now the trend is basically still on the uptrend. It's still supported. When the trend is up, no bad news can turn it down. When the trend is down, no good news can turn it up. Yeah. And anyway, all these political things, you believe them. Today they say no trade deal. Tomorrow they come back again. Just Donald Trump has given us a good lesson already to learn something, not to believe. Okay, so all these things, although you don't believe, but the market will still react to it and give you a lot of opportunity, reaching the top level for you to sell down, reaching the bottom level for you to buy up. But do beware of trending days whereby you will run through levels. Yeah. So again, my answer to you is go and explore pivot trading. Pivot is a good intraday strategy.
All right. So, Tom, as you know, it's been with the U.S. and China tensions, right? What do you see or foresee happening in the Chinese and Hong Kong markets in the coming months?
Well, again, whoever asked this question, you didn't get my point. I already told you I'm not a fundamentalist, but since a question is being raised, I can attempt. But my attempt would not so much like try to foresee the trade war in terms of normal people approaching the fundamentals. Let me talk about the China market. All right, China market. The China market is actually a very closed market. Do you know that? The Chinese economy is coming up very strong. They are almost like the second biggest already, overtaking US anytime. But in terms of the financial market, they are still very, very underdeveloped. Underdeveloped meaning what? The Chinese government is doing a lot of control such that they are very afraid that once this control is not there, they know one thing pretty well. If their 1.3 billion people start to go into the market without knowing what to do, they will all die. And it's going to become a government problem. Now, let me see whether I can I can show you a chart to explain that. Is it okay, organizer?
Yeah, go.
All right. Are you able to see my chart still? Okay. I'm trying to look for. Wait, wrong one. Just give me another minute. I'm trying to show you the China chart first. All right. Take a look at this. I'm going to squeeze all the way to what happened in year 2014. All right. Whether you all remember something long time ago or not? Long time ago, whereby you see how the Chinese market, right, is actually not really moving. Look at the left side. It's not really moving, yeah. Then towards 2014, there's this event called Hu Gang Tong. It's called the China-Shanghai Connect, whereby China start to open up to the world in a manner whereby they allow you to access Shanghai through Hong Kong. All right, when that thing finally kick off, can you see this whole spike up? Everybody is trying to come into the market. All right. Now, this whole spike up is by external people coming in. And what happened to this second leg up? This second leg up is by the Chinese people. The Chinese people themselves start to buy up because they see people making money like that. Why do I know this? Okay, never mind. Anyway, no time to tell you how I know, but I have my sources that this thing, when the Chinese people start to buy up, and you see what happened next. This whole thing crashed until everybody almost died. Yeah. Now, after that, the market went quiet all the way until it started to go above 200. Then it started its uptrend again. Okay, fundamentally, what happened today? It really doesn't matter about the trade war. The trade war is to affect any other thing. But China is coming up very, very strong. Why? Because in the Chinese company, they are quite advanced in technology. Huawei plus a lot of other, all these companies now, they are very, very good, whether you are aware or not. Now, don't ask me for names, I can't give you the names. But it is because of this, for the same reason why NASDAQ, why NASDAQ has been so strong, because NASDAQ are all the technology stocks, yeah, that on the contrary, during a crisis like pandemic, when everybody is like failing, business are dying, they are striving because of the need of technology. So this is the same reason that I will apply to the Chinese financial market in terms of the stock market. This is my view. So whatever trade war is going to only give you knee-jerk reaction, but will not bring the Chinese market to a crash.
That's a very good observation, Tom. All right, our next question is probably our final question. Thank you so much for sending in your questions. The rest of the questions will probably follow up through offline when we send our follow-up email to you. All right, our last and final question is from Derek. He's asking if there is a lag in the moving average or other indicators. Would you recommend a lower time frame to 15 minutes or 5 minutes in a way to quicken it? Or to add on to that, what would you recommend would be the time frame? Someone new to TA to look at.
No, again, this is a repeated question. Maybe I didn't say it clear enough. Moving average itself, to cover the details can be very complex. What I've shared with you, right, is to use the moving average to define where the fair value is. This fair value should not change very fast. So because of this, maybe some people think it is lag, right? And also, if let's say the fair value is here, and the market trade up to this level, and the fair value is still here, and this market plunge all the way back down, and therefore because of that, you feel it is lagging. No, it is wrong to think that way. Now, of course, I will be using other moving average to guide, but for today's topic, I will stick on to the purpose of defining fair value. Now, if the market is here, your whole strategy is to want to buy as close as possible to the fair value. Once the market trend up already, you probably need to use other method to take profit. You can use price action, you can use reaching a certain level to get out, or okay, like if you really insist that I give you a parameter, I use another set of faster moving average that I call 138. That means using another pair, 8 with 13. Parameter 8 with 13. But I do want to give you one warning. Do not get addicted to this because market does not trend all the time. And when market is trending only, then this pair would give you a good guide. The rest of the time, this pair will give you noise. So basically, to give you a summary, when something is lagging, it is stable. When something is fast, it will give you noise. There's always trade-off. All right. So hope I've given you the answer that you want.
All right. Thank you so much, Tom Yuen, for a wonderful webinar. And thank you for being a wonderful audience as well. If you have any other queries, you can reply to our follow-up email, which you should receive tomorrow. And today's webinar is recorded, so you should have a link to the recording as well, so you can revise what Tom has covered today. Once again, thank you for being a wonderful audience, and thank you to you, Tom Yuen.
Thank you. Thank you, everyone.
All right. Have a good night. Take care.